All right, so it's 6:32. Jill, you ready?
We're ready.
All right, so just to start off, we're going to make this interactive, but as a quick introduction, my name is Eric Blake. I'm a certified financial planner with Blake Wealth Management. Our primary focus as a practice, as well as our podcast, the Simply Retirement Podcast, is women over 55, planning retirement, following, in some cases, divorce, becoming widows, or just maybe solo agers for whatever reason. And that is the true focus of our practice. A lot of times I'll get that question, well, why would you focus on just women over 55? And it's because that's my story. I was raised by a single mom, never actually knew my biological father. They divorced when I was probably a year and a half. And then my grandmother was widowed when she was 62. So I've seen those challenges. And this is really why I'm so passionate about this. And why I wanted to invite Jill Lowe, who is the collaborative divorce attorney with J. Lowe Law, LLC, to join me to hopefully provide some value, answer your questions. Again, we've got questions that have been provided in advance. If you've got questions, please go ahead and share those in the Q&A. We'll try to get to as many of those as we can. I know Jill and I both have our own questions we want to go back and forth on. But Jill, go ahead and introduce yourself and we'll get started.
Yes. Good evening. Thank you all for joining us. My name is Jill. Like Eric had introduced, I am a collaborative divorce attorney, and I will kind of explain later on in a question what that is if you haven't heard. My office is McKinney, Texas. And, before we jump into questions and the discussion for today, just want to remind everybody, you saw it whenever you signed up, that this webinar is just for informational purposes only. There's no attorney-client relationship established by that, even though I'm an attorney, just giving some educational information. And so if you have a specific legal question, I always suggest that you consult with an attorney of your choosing after today. But I'm not here to give legal advice. I'm just here to just generally answer and talk about educational kind of related questions. So just wanted to mention that before we begin.
Perfect. And as I get my own housekeeping out of the way, I'll scroll down to my own disclosure here. As Jill said, informational and educational purposes only. When it comes to any specific tax advice, tax planning, anything like that, you want to be sure you consult with your own financial advisor, with your own CPA, your tax advisor, to make sure you address those specific questions. I know, as Jill said, she and I are actually both here in McKinney, Texas. I would also say, and Jill, I would assume you would agree with this, if you're in another state, be sure you're paying attention to your own state's rules, your own state tax laws, anything like that, state legal rules. Just be sure you're asking the right people. We're just here to provide general education and hopefully get you on the right path. I'm also going to share real quickly. So Jill, as I talked about at the very beginning, I'm the host of the Simply Retirement Podcast. Jill was on the podcast back on episode 62, and I'm going to share a link to that episode in the chat just so you can have access to that if you'd be interested in checking that out. But again, we want to make this as interactive as possible. So again, please provide any question that you might have. Let's see. Sure. I just closed my Q&A box. Keep that going there. Jill, I think it would be a great place to start. You brought it up right from the very beginning. If you could just kind of chat about the differences in type of divorce. We're talking about mediation, collaborative, all those fun things that nobody really wants to think about. But when you're making the decision to move forward, you got to figure out what's going to be best for you.
Yes, that's great, Eric. So when someone is facing a divorce, there's multiple different options for the process. Usually, what is generally known as the litigation process. That's the one where you go to court. If you can't reach agreements, then you go before the judge or jury, and then they make the decisions for you. It's a very formal process, formal discovery, which is exchanging of information. It's not confidential. Everything that's filed in the court case, everyone can see for the most part. When there are some exceptions. And then there's a process called the collaborative divorce process. And that's what I primarily practice in. And that's an alternative to the litigation process. It is out of court. A court case is placed on hold to allow the parties to engage in the collaborative process. Each person has a collaborative attorney. The attorneys work together as a team. The goal is settlement. We focus on goals and interests of the clients instead of positions. So a position would be, I want the home, whereas the goal and interest might be, I want a suitable housing in the same neighborhood for my children to attend school. So there's a difference in that. We often engage in neutral professionals, financial professionals, mental health professionals to help with parenting plans. It is a confidential process. So when we attend meetings and we take all the discussions, can't be used later in a court case. And so that really provides everyone an opportunity if this is a safe environment. Also, there's transparency. So there's a level of we're going to exchange information voluntarily. You're going to give me what I need. I'm going to give you what you need in order to make sure we get everything covered. And I would say one of the biggest takeaways between collaborative and litigation is just the positions, interest-based negotiation, and in litigation, attorneys are not working together, working as adversaries. So it's a heightened level of conflict, whereas in the collaborative process, it's more focused on families, goals, really trying to achieve a result that's best for everybody. And mediation is not collaborative. A lot of people think that collaborative divorce is mediation or mediation is collaborative divorce, and that's not the case. Mediation is a formal process, but it's part of the litigation process. So people attend mediation to try and settle their dispute before they go to a judge or a jury. In a collaborative divorce process, sometimes mediation can take place if the parties just are reaching an impasse on a particular issue, but it's rare, but it can happen. Mediation lasts a day or 2 days. You meet with a mediator who's trained and neutral and just kind of takes offers, counteroffers back and forth, facilitates trying to reach agreements. So those are really kind of the differences in all of that. And so, Eric, do you have any questions or anything?
And this is one of the things is, as I have worked with more women who have gone through a divorce, one of the things that becomes challenging is, especially with many of our clients who are maybe in their 50s, 60s, or even beyond in certain cases, is it just becomes, there's almost like an extra level of stress when okay, I might not be in a position to go back to work if the financial implications don't work out in my favor. So that can be really stressful. One of the things you talked about was mediation being the part of litigation. Does a case always go through mediation first, or are there situations where it jumps all the way to litigation where we're going to court no matter what?
Well, and so most often everyone attempts mediation
Okay.
before going to a final trial, just because you really want to try to give every opportunity to reach a settlement. But sometimes a settlement requires both people to agree. So sometimes you can't reach an agreement. And so you need someone to make a decision. And that's what happens in the litigation process.
Here's another one, and this is, and
Yeah.
I've actually got another guest coming up on the podcast very soon to talk about this, but I would love to get your perspective. So actually, at some point, you got to decide: am I going to go the collaborative route? Am I going to try mediation? Is it going to go to litigation? At what point do you suggest, or how do you guide people in making that decision as to which path to go down?
So the collaborative divorce process is a voluntary process. So it requires both spouses to agree to the process and hire collaborative attorneys. So when someone calls me, potential new client, I'm talking about their options initially because that's when you want to really make that decision. And you really want to have a conversation with your spouse also of, hey, I heard about this process. Let's look at this and let's both go consult separately with separate collaborative attorneys to learn more and see if this would be a good fit for our situation, for our family. And sometimes it's not always a good fit because in situations where there's an imbalance of power in the relationship or someone does not feel safe or comfortable voicing their interests in front of their spouse, it happens, and that's okay. And it's probably not best to be in that process, a collaborative process. You might need a more formal, structured process where there's less interaction with the spouse.
So one of the things I was also curious about is, our primary focus being retirement planning, is I didn't know advisors actually just do that. They only focus on retirement income. I'm curious if that's a similar situation for you in that, are there situations where you think, hey, that probably would have been a good example of a collaborative divorce situation but they didn't know collaborative divorce was even an option. It's because that's not, you don't see that in the movie. Collaborative is not in the movies.
Yeah. I mean, War of the Roses was not
Right.
based on the collaborative process. Even the new movie that came out, is based on the War of the Roses. It's fighting, it's conflict. It doesn't have to be that way. One of the great things about the collaborative process is assembling a team that helps the couples to disassemble their marriage and their finances. And that can come very tricky. It's aligning yourselves with the right people to guide in that process. And so have been finding lately that couples who are divorcing later on, they really need to have someone like you involved early on in the process because they need guidance, right? You have to look at not just the snapshot of what's happening now, but you have to look long term too. What are the next 10 years going to look like? What about health insurance? What about retirement? What about income? And how long do I need support for? All these questions come to mind.
Well, and I
So,
think sometimes, and I don't want to, I won't mention any names, but she's actually a neighbor. And, you go into this thinking we just want to get this over with as fast as possible. And you go through the mediation process because you think that's going to be the easiest thing. And then a couple of months later, well, I go into the doctor and, hey, well, you don't have insurance. One of those issues that, when you're trying to get it done in the easiest way possible, you don't necessarily think about these things. And it was a really difficult situation. Fortunately, she reached out to me and said, hey, I've got to get health insurance. Who do you know? Who can you help me with? And I was able to connect her with somebody to get that done. But that was an extremely tense situation for her when she said, I don't have health insurance because I was on his plan.
mhm.
And I think that's one of those things that, again, you got to have, as you talked about it, the right team on your side to make sure, because if you don't know what you don't know, then there's something that's going to get missed. And in many cases, many really important. Which brings me to one of the things you and I kind of chatted about before we got started was we actually had an introductory phone call last week with a lady who had been married almost 20 years, got an 18-year-old son, and they've already started the mediation process. As she had said at that time, had already disclosed her financial information. He's got another couple of weeks. But what she's worried about is because she has not, in her words, she has not been allowed to participate in the finances. And so she's worried that he might try to hide certain things. And, you got IRAs and 401ks, and it becomes I mean, there's a lot of people that lose track of 401ks on their own, much less trying to figure out where everything's at going through a divorce. So how would you say for somebody like that, what are the next steps, or what are some considerations for somebody who may be worried about something like that? Whether it's, it really is because she was never allowed, or maybe she just didn't take a proactive role. We don't really know the answer to that question, but what does somebody do in that case if they are worried about, am I going to get my fair share when this is all said and done?
I think the best advice would be to voice that concern early on, to not wait until the case is nearing end of, hey, I have this concern and I don't know if everything's being disclosed to me. I think when you raise the concern early on, an attorney can have options to address it, whether it's through discovery, whether it's through hiring a consultant to do tracing. There's a number of ways to address it. And so raising it early on and not waiting is the best way to proceed. And then look at who can you hire if you need to do a tracing exercise or you need to look back a few years and check. But it does happen where someone forgot about an asset. It could be an old pension plan of an old employer, and then it's, oops, here it is. So there is language in a divorce decree also that attorneys can include to cover assets that
Okay.
were not disclosed and are later discovered after a divorce.
Well, one of the things we talked
Mhm.
about with her, we'll talk about, what a CDFA is, a Certified Divorce
Mhm.
Financial Analyst. Again, she and I talked about what that is because I don't serve in that capacity. And we'll talk about how I
Mhm.
fit into this whole thing here in a bit. But one of the things I believe her attorney said is let's wait until he provides his stuff, until he's gone through his part of the discovery. And then if we feel like there's something that's not there, then we'll figure out what next steps to take. From a timing perspective, not asking you to second guess the attorney, but does that seem reasonable? If somebody's in that situation saying, okay, let's wait and see what he presents, and then we'll make a decision as to whether we think it's full
Yeah.
or if we feel like something's missing.
Yeah. I mean, that's probably what I would have suggested too is,
Okay.
okay, you raise a concern to me. Let's see what we get. And then let's look at it and we can come up with a game plan of how to address your concern and see what we need to do.
Awesome.
So,
Well, and I brought up the topic, but the CDFA, and just so the people that are joining us know what that means. So there's something called a Certified Divorce Financial Analyst, where they can, and hopefully it'd be helpful if you could actually kind of describe, because CDFA can play different roles. Actually, they can be kind of a third party objective. Okay, let's break everything down. Let me help you analyze things. But then can be situations where, yes, if there is really something going on, they might be hired by one party or the other to represent their interests. So can you talk a little bit about where you incorporate a CDFA, if you do, or what that situation typically looks like in your cases?
yeah. So, in my collaborative cases, having a CDFA can sometimes be helpful with doing projections, and there's software that they have access to projecting out. Okay, you're going to receive this amount of cash. How long is this going to last you? And so there is access to those things. But for me, it doesn't have to be CDFA. It can be just a financial planner as well who can sit down with the client and look at the estate spreadsheet and say, okay, what are you thinking? What would be best for you? What are your goals long term? And then, like, for example, you, Eric, also okay, we're nearing retirement. Is it better for you to receive retirement assets or real estate? And then how are those retirement assets going to work for you? And then when can you start pulling on Social Security? All these things come into play because as the clients are aging, and especially for a spouse who hasn't been working, they don't have the Social Security, they don't have the 401ks and the IRAs that a spouse who has been working has been contributing towards. It becomes a little bit more challenging when we start looking at dividing the estate, and also maybe they're not working right now. So how long are these retirement assets going to last them because they're not contributing to them after the divorce like their spouse is contributing? So really sitting down with somebody before a settlement is reached, before negotiations happen, and sitting down and really looking at the big picture and coming up with an idea of how best to help yourself in structuring the settlement. Because once the settlement's done, we can't go back and undo it. And a lot of people wait to meet with a financial advisor, financial planner, until after the divorce is over. And I always think that person needs to be incorporated early on in the process. And in the collaborative process, we bring them on as consultants, and they have access to the estate spreadsheets. Sometimes I'm in those meetings and we're going through projections and we're looking at how, if this person's to receive these assets in the estate and then this is their budget, this is what income they have coming in every year, then how long are these assets going to last them? And what will the next 10 years look like, 15 years look like? When do they need to start drawing on those assets to pay for their living expenses? So it becomes very helpful in knowing also whether we need to ask for maintenance, which is alimony, as well to cover a period of time, or whether we need to look at a budget and make some adjustments in a budget. And so going back to your example, in what we do in collaborative cases is look at budgets, health insurance, car insurance, housing expenses, all these things that sometimes people forget, that you're on the same car insurance plan, you're on the same cell phone plan, your health insurance is being covered. I mean, it's all these things where it's like, oh, I'm going to start covering those when our marriage ends. So anyways, I know it's a long way to answer your question, but I think it's just really important to involve someone early on in the process.
Well, and that's what I shared, not with the neighbor, but the lady that I spoke to last week. she's going to be in that difficult situation where she has not worked in 20 years. They have an 18-year-old son together. She hasn't worked. She's been a stay-at-home mom taking care of their son. So when you start thinking about, obviously, again, most of, if not all the retirement assets are in his name, but
Mhm.
also you start thinking about that, there's always, Social Security always gets a bad rap, because it's not enough and it's going to run out and all these different things.
Mhm.
But the realistic scenario is that Social Security is also the one source of guaranteed lifetime income that most people and many women have, that also goes up every year with inflation. Whatever you think about it, it may be the only source of guaranteed income you have available to you. So
Yeah.
in her case, you think about, well, she might, if she's been out of the workforce for 20 years, that's 20 years she doesn't have counting towards Social Security, whatever she did before or whatever she does after. It's either going to reduce her own benefit or she's going to be dependent on a spousal benefit or ex-spousal benefit by the time that comes. And so back to your point of saying, okay, we got to look at all these different variables of not only do we need to look at assets and how long your assets are going to last. You can't negotiate Social Security. That's not part of the deal, but
No.
you need to know how it fits in. You need to know, am I going to be receiving half of what he's getting? Or have I worked enough that I'm going to be getting my own benefit? Those can be huge as far as just, again, knowing what your future is going to look like and how dependent are you going to be on certain things, certain income sources or certain assets to help you make as educated decision as we can. And we may never get it perfect, but you want to be as
Yeah.
educated as you can and make the best decision as you can under the circumstances.
And you brought up a really good point, and I think it was a question that someone had asked when registering
Mhm.
about an IRA, which is a retirement account,
Right.
being a separate asset in the divorce. And so in Texas, even if an asset like a 401k or an IRA is in one spouse's name, it doesn't mean that that's their separate property. It means it can be still community property that we have to discuss and address on how we're dividing that asset. And if someone wants to make a claim that it's their separate property, then they have to show proof of it
Right.
being their separate property. But just because the asset is in one spouse's name doesn't make it a separate asset. There's so many other factors that go into that. We divide all the time 401ks, IRAs, pension plans that are in one spouse's name in a divorce that were accumulated and contributed to during the marriage, were open during the marriage. Just wanted to mention that because I think that was one of the questions.
So let's go and tackle those questions. We had suggested or said that we would answer the questions provided in advance as part of our dialogue here. So you kind of already addressed one, but I'll go ahead and ask the question as it was posed. Are IRAs separate assets in divorce proceedings, which you basically just addressed? However, just to kind of a spin on the question, you brought up if they're going to try to say it's separate property, what would be an example of a scenario where they might try to prove that as an example, something they may have had prior to the marriage, something along those lines?
Yeah. I mean, I'll give an example. I have it in a recent case. There was a pension that was started before the marriage. There was years of service before the marriage, and then they got married. And then he continued to work for that same employer during the marriage. So we've had to figure out what's the community property piece and then what's the separate
Got it.
property piece. And you'll see that a lot with second marriages or later in life marriages where people have had jobs before the marriage and have been contributing to retirement accounts before the marriage. It's just getting those documents, figuring out what those pieces are. And so I think, I'm just going to kind of briefly say like what we do. And I tell people this all the time, and even in the collaborative divorce process, what we do is we try and put puzzle pieces together for the estate. And we do that by gathering information. And so we want to identify the assets, characterize them, value them, and then divide them. So there's like a little kind of step process that we go through to make sure we have a full puzzle put together before we start pulling it apart again.
And
So,
that's awesome. Now, here's a second question. It's kind of along the same lines, and I want to get your take on it. Then I'll provide some of my own insights. But what is the least costly way to split IRAs when they're all are in one name? which we've actually kind of talked about. We touched around it, but I don't know we've actually directly answered the question. So
Mhm.
you're up. What's
Okay. So different retirement accounts are required to be divided differently. Some require what's called a qualified domestic relations order, which is a separate order from the divorce decree. Those are usually 401k plans, pension plans. But for IRAs, what I have seen in most situations is as long as the divorce decree identifies and outlines who's getting what with that IRA, then it can be transferred by just going to the institution and showing them the divorce decree, filling out some paperwork, and then the other spouse who's receiving some of that IRA or all of it, I've seen an entire IRA get transferred. They have to open up another IRA and roll it
Yep.
into that IRA. And then they can start managing it and work with someone like you to start managing it. Let's see how we want it to be held.
Well, and that's an example of one of our newest clients. She emailed me end of last week saying, hey, yes, I'm ready to move forward. We actually have been working, going back and forth, trying to get her all set up for about 10 months. So the divorce was actually finalized at the end of 2024, but she was having so much trouble with her current advisor, just getting information and trying to get all the ownership changed. She got to the point where she was really ready to go early in 2025, but she was so worried about that lack of communication and getting all these ownership changes done that she's like, I just don't trust them enough to leave before all this is taken care of. We finally got, it was actually an annuity. There's a couple of annuity contracts involved. She finally got the last one changed in her name. And now she's okay. Yep, let's do it. We got everything. Everything's in my name. It's where it should be. Let's go ahead and get everything transferred over because I don't want to work with them anymore. They were our advisor, but he never spoke to me. That was one of the things she said is, if I asked a question, my husband made me feel stupid. If I didn't ask a question, they made me feel stupid. It's like, you can't win for losing. So she was like, I just want to work with somebody that listens to me. And so that's really, in her case, it was very similar to what you just talked about, where she had some of her own IRA money. She had some inherited IRA money when her father passed away a couple of years ago, but she got a pretty decent chunk of what was his in it because he was going to get the house and some other things. So there was, it's all the back and forth trying to figure it out. But ultimately, that's what was happening is they were transferring assets out of his accounts into hers because she already had IRAs. So we didn't necessarily have to worry about setting up new ones, but there was that process of transferring his IRA money to her IRA money till they finally got it all finally done. And now she's coming on board and it's a really difficult divorce. And I know you've seen these cases, but it's like she's like this weight was lifted off of her that she's now, okay, I can move forward with my life, whatever that's going to look like going forward. And it's actually it's exciting to see somebody. You don't want to have somebody go through that circumstance, but now that you kind of see that weight lifted off her shoulders, it makes me excited about the work that we do because she now feels so much better about where she's at financially.
Yeah, I mean, it's definitely once all the ink is dried, it's not always done. There's always some work that needs to be done to finally get it all, transferring financial accounts, real estate. It's a process. You did bring up a good point too, is it was important for your client to have her own advisor, someone who was not connected to her husband, so that she kind of had this level of new form trust and confidence and confidentiality to some extent too.
Yeah. Let's see. So that's all the questions we got in advance. I know you said
Okay.
you might have a couple of things you wanted to run by me, and I'm happy to answer those, and we can see if we get any other questions. Again, those that are still who are with us, please feel free to, if you've got more questions or if anything's come up since we got started here, feel free to drop that in the Q&A. Just as a reminder, if you're on a computer, you should see the Q&A at the bottom, or you might have to click the additional buttons there that you might have to click. But also if you're on a phone, you might have to scroll up to see the Q&A, or if you're on a tablet, same thing. You might have to scroll up to see the Q&A option. But please feel free to drop in any questions if you have them.
And Eric, I kind of mentioned about like when I think it's helpful to involve someone like you, but when do you want to get involved? When do you feel like you're best utilized?
Well, so in general, when people finally do hire us, it's usually on the other side of the divorce. However, just giving you an example of the introductory phone call that I had last week, I told her, in many cases, a CDFA is going to be that objective middle person to help both sides potentially, depending on the circumstances. But where I come in is really exactly how you described it of, okay, I need, as we are thinking about what this settlement's going to look like, I need to have as clear a picture as I can about what the future is going to hold from a financial perspective. Again, looking at it, everything across the board from Social Security to what type of assets do I have? Because when you're thinking about a separation of assets, it's not as easy as saying we're going to split them 50-50. You also have to think about, okay, depending on what else is involved, if there is real estate where one spouse might get the real estate and less retirement assets, and then the other one gets no real estate and a bigger chunk of the retirement assets. But what are the tax implications of those retirement assets? Is it all pre-tax money, meaning IRAs or 401ks, money that's going to be taxable when you take it out? Is there brokerage accounts or money that you can get to relatively quickly because there's no age 59 and a half rule? So like an after-tax brokerage account would be an example, or a stock account maybe. Or you also have Roth IRAs that are tax-free depending on your age as to when you can draw those dollars, and the difference between tax-free assets that you receive versus 100% taxable assets when you receive those makes a huge difference. And then again, when we include things like maybe a pension or Social Security, what your Social Security situation is going to be. Again, if you haven't worked, you've been a stay-at-home mom. And again, we know just from statistics, women are more likely to spend time out of the workforce caregiving, either early on, taking care of children, or is more and more likely now taking care of elderly parents. So either side, it could be both. So you've lost time in the workforce. So are you going to be receiving a Social Security benefit of your own because you did have enough years, or are you going to be receiving a ex-spousal benefit, which is half of your ex-spouse's, whatever they would be receiving? That's a huge difference. If you think the $3,000 a month benefit for the spouse, the higher spouse, that might only be $1,500 for the other spouse, the non-working spouse. That's a huge difference. And even if it doesn't seem like it, $1,500 versus $3,000, and then you think about cost of living increases over the years, it does make a pretty significant difference, especially again, as I talked about earlier, if that is the single guaranteed source of income that you have. And so when you start putting these pieces together, as I explained to her, I said, where I would fit in now is completely on your side of the table. I don't care about what he's doing. Okay, we're talking about your situation and what it might look like so that you can make an educated decision, or you can communicate with your attorney as to, here's my circumstances. I need to make sure we're getting this situated so that I'm going to be okay when it's all said and done.
Yeah, that's great. We did have a question come up about tax implications. Do you want to take that, or do you want me to?
Let's see. So we got curious about the tax implications for 401k, 403b, IRAs. How do you get the other person to inherit the tax liability? You can't. So based on how you split the assets, and if you feel free to chime in, Jill, on this part as far as how this, but ultimately, once the assets are in your name, you can't say, well, I want him to pay the taxes. It's basically whoever takes the distribution, whoever's name is on the account, because all IRAs, all 401ks are individually owned assets. So once those IRA assets are split and then they're in your name, and you take the assets out, you take a distribution, it's going to be taxable to you. Now, again, obviously the key is the timing of if in the year of divorce versus future years, if you're now filing single, you got to be aware of those. And is there a potential change in your tax rate because of that? Those types of circumstances as well. Now, I will say 401k specifically, we talked about the QDRO, the Quadro relationship, where if we're splitting an employer retirement account, also being aware of age. So just because you are getting divorced doesn't mean that age 59 and a half rule doesn't apply for IRA accounts. However, when we're talking about 401ks, there are some rules there that doesn't mean they're not taxable. Everything we're talking about is still taxable. But there may be some circumstances where you can avoid the 10% penalty, the early withdrawal penalties for being under 59 and a half. Obviously, that comes into play depending on your liquidity situation. If you haven't been working or you're going to need income very soon, that might be at least something to be aware of. But from a tax liability standpoint, whoever's name is on the account, they're going to pay the taxes.
And I will say, I'll add to that, Eric, is in a divorce, when we're looking at dividing the retirement accounts, when it's divided between spouses pursuant to a divorce decree, that's not a taxable event.
Right.
So
Yeah, exactly.
when
Yes.
so when one spouse receives a portion of a 401k or IRA or a pension, not a pension, but a 401k and an IRA, when it's divided, physically divided, that's not a taxable event. But what Eric's talking about is when after it gets divided and someone wants to take a distribution from that
Right. Yeah, exactly.
asset.
So going back to the example I was talking about of our newest client, as they were moving assets around, basically what's happened is considered technically it is a direct rollover where the money is being rolled from his IRA to her IRA, meaning there's no taxes on that transaction. It's the actual distribution, taking possession of the funds that creates the tax implication.
Yeah. And so, Eric, in that situation, if you have a client come to you and say, I'm to receive portion of my spouse's 401k, would you always suggest that they roll it over or leave it in the plan or take a distribution and then put it somewhere else? Like in that situation, I'm just saying, a client comes to you and is, I want to get the cash, I want to get the money. I mean, how would you
It's
advise
always
them
going
on
to
that?
be dependent on the age of the income situation because there's some specific circumstances or specific situations you need to be aware of. As an example, you're going to need money. We knew for sure you're going to need money. You might want to leave it in the 401k because again, based on the distribution options you have, it's always going to be taxable, but you might be able to avoid the 10% penalty. But you also have to be aware when you take money out of a 401k plan, out of an employer plan, there's a 20% required mandatory withholding for tax purposes. So if you take $100,000 out, they're going to take 20 grand right off the bat. Even if you don't owe that much, you're going to have to wait and get a refund later. If you paid too much, you're going to have to wait to get the refund, but they are required to withhold 20%. So depending on the circumstances, would it make sense to roll it to an IRA first, depending on your age, because then we have a little bit more control over what tax rates you're going to pay the taxes that you can withhold. If you know you're going to need to pay taxes, we could say, well, if we're taking the distribution out of an IRA, we could choose to have 0% withheld, or we could have 10% or 25%. So that mandatory 20%, it might be way too much. It might not be enough, depending on, again, what your specific circumstances are. So you just want to understand your age, your income needs, how quickly you might need the income, to decide which of those buckets do I either leave it in the one it's in, or do I roll it to a different one prior to taking any money out if I'm going to need income.
There was another question.
So 71 age, so there wouldn't be a penalty, right? So yeah, so there's no penalty. If you're over 59 and a half, there is no penalty. It's still taxable. Again, assuming that your name is on the account, it's still a taxable distribution. But if you're 71, there's no 10% penalty. So I think, so I know we talked about the question where I would fit in. Any other thoughts or questions that you might have for me?
No, I think the one that I asked about, which you kind of answered, was, keeping the funds in a employer's 401k plan or taking them out. What you always see is the preference, and I think you kind of covered that as well. What would be your best advice that you would give someone who's going through a divorce, hasn't finalized things yet, and is, concerned about their future? What would be your best advice to them?
I think first, if you're depending on the financial circumstances and saying, okay, well, do we have some idea of what your scenario looks like, what your puzzle looks like, or what the pieces of your puzzle look like, so we can start putting those together. Because obviously, it's going to be different if you don't really have retirement assets or investment assets. Then we're talking about, okay, let's at least be aware of what the Social Security implications are going to be. But if there are going to be assets, start thinking about what type of assets those are. But I would first say if you're going to engage with a financial planner to help with this process, you want to make sure you're working or talking to someone who understands distribution rules. Now, actually, I'm putting it from the perspective of somebody who is in their later years, who is in those gray divorce years, the 55 and over, where we're talking about, you may or may not be able to go back to work because of age or circumstances. You might not need to go back to work. Again, it's all dependent on the situation that we're talking about. but just understanding what are those distribution rules? How does the advisor, making sure, and as I've always said, I don't feel financial advisors, just like you. I mean, you found collaborative divorce as what you feel the best. That's where your passion is. That's what you feel good about doing. Very much the same about retirement income planning. Because if you think about, you spend 40 years of your life, of your working years, saving, building up money, and all of a sudden now I've got to figure out how do I take that money out and turn it into an income. It's a completely different situation. And I don't think the same advisor can be an expert in both because there's just different rules, there's different concepts that you have to be aware of. Again, especially when we're talking about how does Social Security fit in and which account should I be taking from first, all those types of things. So if you're trying to figure out your situation, the divorces, it's going to happen. I just got to figure out how to make the best of it and how to evaluate my situation to make sure I'm going to be okay when it's all said and done. Work with an advisor that understands retirement income planning. And that's going to be your best option for coming out the best on the other side, because you're going to know, you're going to have some idea of what my income would look like. And do I need to ask for more? Do I need to ask for spousal support? Because this is just not going to be enough. I'm not going to be able to make it on how this is being structured. Or does it just give you the ability, more ammunition to go back to the attorney and say, hey, I need you to work harder on this. I need you to look at something else. This is not going to work.
Right.
So as much information as knowledge is power, but if you don't know, you don't know. And you find yourself on the other side saying, well, I wish I would have asked for more than that. Or I wish I'd have asked for this type of asset versus that type of asset. So I think it's important to understand you want to work with an advisor, especially if you're in your retirement years, that understands the retirement distribution phase of life. Because again, you spend 2/3 of your life accumulating and only 1/3 of your life decumulating, but that third might be more important than any of the other. If you can go back to work, maybe that's what you want to do, but in many cases, it's not feasible to think about doing that.
And Eric, you can work with people who are coming out of divorces that might not have a lot of retirement too, and they need to start saving for retirement as well. You're able to help them with that as well.
Right. So we've got time for more questions if we have any. So anybody else have any other thoughts or questions? We still got some people left on here. Just trying to think if I had anything else for you. Again, I posted the link to the podcast episode that Jill joined me on, the Simply Retirement podcast. It's been a couple of months now, but it was a great episode. So please go back and check that out. All right. So I actually did get another question. Okay. So can you elaborate about rollover to plan tax now in order to avoid tax in the future? Can this be part of the divorce agreement? I'm not sure if I completely understand the question. Let me look at this one more time. Can you elaborate on about rollover to plan tax now? So I think I get kind of the gist of what you're asking. It really depends on if we're talking all pre-tax dollars. If you have Roth money, if you have other types of assets, I think it's very important to evaluate how that split might change based on saying, okay, if one spouse gets all the pre-tax dollars, but the other spouse gets all the brokerage and the tax-free money, that's actually a significant difference depending on what the breakdown of assets actually is. So and I'm not sure if I'm answering the question exactly right or not.
Now I can avoid tax in the future. So this would be my suggestion. In at all tax questions, always consult with your accountant, with your CPA. But avoiding tax in the future, I think I'm not aware of really any situations other than like what Eric, you mentioned, having a Roth IRA, right, where you can avoid some of that tax in the future. When it's divided, when it's rolled over as part of the divorce, that's not taxed. But when you later take a distribution from it, I don't know if there's ways to avoid paying taxes on that. I will say sometimes in divorce, when we were looking at the spreadsheet, sometimes we'll have a financial planner or the neutral financial professional kind of tax impact an asset like a 401k or an IRA that's not a Roth, where we can really see what that net number is that a person's receiving, it doesn't mean it avoids the tax later if the funds are later removed from that account, but at least it gives someone an idea of when we're comparing other assets to one another, that it's all apples to apples, oranges to oranges instead of apples to oranges.
Now, and this it may muddy the waters a little bit, but I think from a tax planning perspective, if we said, okay, now this separation of assets is complete, if you're in your working years, maybe you're in a lower tax bracket, you might be able to incorporate Roth conversions. Meaning, if you're in a low tax bracket, I can convert money at a lower tax bracket today that would be tax free in the future. That's a possibility. Especially now, we think about the new tax law with the One Big Beautiful Bill Act, where now we had the age 65 exemption, $6,000 per individual. That might be something that could come into play where, again, that's more of an after the assets are divided and now I'm just moving forward, where tax planning could come in that might create the future tax-free income. But again, that's very individualized and you would want to look at, again, working with an advisor that could guide you through that.
Yeah. And I see this other question here about, can a court make me continue to work, or can I retire when I want to? That's all something that I would suggest consulting with your attorney about, is how your decision on retirement will impact your case and your situation. Obviously, I've represented people who are nearing retirement or have retirement in mind, and then it's all in the way that you sometimes structure a settlement as well. But if retirement's in the near future, I would definitely say mention it to your attorney. So when you are structuring a settlement, that is kept in mind as well, because you wouldn't want to make some commitments that you're unable to fulfill later on. So that would just be my advice to that. And judges are unpredictable, juries are unpredictable. So I can't predict what a judge would do. They are not, we're all human, and sometimes they get it right, sometimes they don't. So
So it looks like we got a little bit more clarification on the prior question. So yes, rolling into Roth IRA is part of the divorce process, so it can have tax free in the future. I'm not aware that that would be something you could include because keeping in mind that a Roth conversion is a taxable event. So I'm pretty sure, and Jill, correct me if you think I'm wrong, or maybe we need to steer clear of this altogether, but forcing somebody to recognize taxable income as part of a divorce proceeding, I wouldn't imagine is a possibility. But that's
yeah, I
basically a
think,
Roth conversion is saying we're taking money out of a pre-tax account to move it into a tax-free account, but that is a taxable event. So I couldn't imagine that that would be part of the divorce decree is you have to recognize taxable income as part of this. I would,
yeah, I've never seen that happen, but I will say that before making a decision and before doing something is to speak with an accountant and make sure that you understand what you can do and what you can't do. And in particular, before you finalize details as well. Often I refer clients to their CPA
right.
to get clarity on it.
Right. So we got a couple about 5 more minutes. If we want to hang in there, has anybody else got any other questions? I will say one of the things, I mean, just asking these questions is at least a good place to start. So if it is something that you're at least aware of, understanding that there is this Roth conversion thing out there, again, talking to a financial advisor, talking to your CPA, talking to your attorney. I think that goes back to Jill, what you talked about is having your team together, having
Mhm.
people that can communicate, having your financial advisor and your tax advisor
Yeah.
communicate. That's one of the biggest
Yeah.
keys that we have is when we are thinking about Roth conversions in your retirement years is saying, hey, we know there's going to be tax implications. Let's run this by the CPA, make sure they're on board with it. Because what's one thing CPAs don't like to do is be the bearer of bad news.
Now,
Nobody likes to, but especially
Mhm.
CPAs.
And I will say, I mean, attorneys, they like to know also what any concerns or questions their clients have too, or what their future plans are. I often ask my clients, "Okay, what are we going to do for work? What does our future look like?" And it helps. the attorney was structuring things. So don't be afraid to mention it to your attorney if you are contemplating something. Have those conversations.
Yeah, I think that's the biggest thing. It's just like I told the lady I spoke to last week, is you being willing to reach out, because she actually just found the website and she's heard my story. I think she said she heard it on Instagram or somewhere. She saw it about me being, raised by a single mom. And she said, I'm going to reach out to them and just ask questions. And that's the best place to start. Just be willing to ask for help.
Yeah.
Get in touch with the right
Yeah.
people that can help provide guidance and be a trusted advisor, whether it's the attorney, the financial advisor, the CPA. Again, having your team so that, again, you put yourself in the best position you can financially
Yeah.
and
That's right.
emotionally and everything else that unfortunately goes into the whole divorce thing.
Yeah. Yeah.
Right. 3 minutes. You got any jokes or anything you want?
No, I'm really bad at jokes. I'm really bad at jokes. I don't have good ones, but
I'm sure you hear attorney jokes all the time, though, right?
yes,
I don't know. I don't know any
I
of them. I'm not
used
suggesting
to.
I do, but
I used to, but now that I don't do litigation anymore.
yeah, it's only funny when you're talking about those guys.
I just want to say we're thankful that you all attended today and asked
Absolutely.
your questions and are just getting more information. So we appreciate that.
Yeah, and I would say we'll follow up with an email to our conversation just in case you do have additional questions or anything else that we can do to help out. We're definitely here to help. That's why we did this. So hopefully it was helpful for a few people. At least we got the questions rolling in a little bit
Mhm.
after we got started, which is good. But yeah, I think it was a great event. Jill, I really appreciate you joining me for this. Appreciate you
Thank
joining me
you.
on the podcast a couple of months ago. And
Yeah,
I'm
thank
glad
you,
I've gotten
Eric.
the chance to get to know you a little bit better and
Yeah.
definitely continue helping people going forward.
Yeah, absolutely. Thank you. Thanks for this opportunity.
Absolutely. Well, thank you guys for joining us. Thank you for the
Yeah.
questions. Jill, hope you have an awesome weekend.
Yeah. Y'all too.
We'll talk soon.
Yep.
All
Sounds
right.
great. Thanks, everyone.
Bye.
Bye.